Welcome to the Investor Empowerment Series radio show, empowering your real estate investing with techniques, opportunities, and information, minus the BS and sales pitches. Now, please welcome the host of the Investor Empowerment Series, Joe Mueller, from the Tough as Nails Investment Syndicate, Joe Mueller.
Welcome back, loyal listeners. This is the Investor Empowerment Series radio show, episode 10. Today's guest is Bill Jennings of Pathway Financial. I really wanted to have Bill on the show because I know he offers some great opportunities for lending and funding in the real estate investment arena. I guarantee you're going to get something awesome out of this episode, so please stay tuned.
Please take a moment to hear from our featured sponsors.
Today's episode is sponsored by Jordan Capital Finance, offering lucrative rates on fix and flip line of credit loans, as well as opportunities for buy and hold investors. Please visit tannisgroupllc.com/funding for more information. Pathway Financial offers 0% interest on unsecured lines of credit loans for all types of real estate investing. Please visit tannisgroupllc.com/funding for more information. Bill, welcome to the show. Thanks for coming on the Investor Empowerment Series radio show today. Can you just take a minute and just talk about, a little bit more about your background and about your business right now in real estate?
Yeah, definitely. So I'm the president and founder of Pathway Financial. We started back in 2005 as a mortgage broker, actually. We kind of went through the whole subprime years in the mortgage industry, and after everything collapsed, pretty much kind of put things on pause, and I moved out of the industry entirely for a few years, and I got into real estate investing at that time. Fast forward a couple of years, I was using a lot of hard money and private money, just guys that I knew that had some money that they'd borrow me to do some real estate investing. And I got into a situation where a hard money lender backed out at the last minute on me. And I was kind of in a crunch to kind of put some money together to get this house I already put down earnest money on and had a contract down on. I didn't really have any access to any more money to get it done. So what I ended up doing, my credit was shot at the time. And I talked to a friend of mine's father who had very good credit and was always willing to help me. He basically co-signed for my business and allowed me to get a business credit line. Basically, was just trying out a couple things to see how I can access unsecured capital. I did everything in his name and his credit, and I was able to access $70,000 roughly in capital, which allowed me to close on the property that I was, under contract on. When I did that, I realized that now all of a sudden I was at 0% interest on this property compared to the fees that I was paying to a hard money lender and to the private investors I was working with. So it seemed to be a better option at that time to start using that capital and flipping that over and over on properties opposed to borrowing money elsewhere. A couple of months probably down the road, I started showing a couple of my friends how to do the same thing. That's kind of where our business was born. I realized that there are a lot of real estate investors out there and business owners in general that have a hard time getting cheap money. So we put together this program where we're able to get people roughly $150,000 in unsecured capital at 0% interest for a set period of time. That's pretty much where this all came from. So we revamped Pathway Financial, moved from the mortgage industry into business lending, and that's pretty much what puts us here today.
I didn't even know how much experience you had on the investing side prior to hearing that for the first time, so that's great. And the fact that you actually fell into it through your own needs, I think, is pretty important to point out because, you kind of had to construct it based off of your own experiences, and now you've created a business based on it, so that's incredible.
Trial and error to get everything where it needed to be, but no better way to start something than when you're the first client, so you kind of understand how things go from both ends of the spectrum.
Are you still actively investing, or are you just focused on Pathway Financial right now?
I'm mostly just focused on Pathway right now. I don't have anything really going on personally with investing. I think the last deal I did was probably around maybe a year and a half ago.
That's cool, because actually I want to hear more about Pathway. And I know you've been at some of the meetups. I know you're one of our sponsors for the Investor Empowerment Series meetup we host in Schaumburg on a monthly basis, Schaumburg, Illinois, for the listeners that are far away. I've enjoyed having you there as a sponsor because you're always very straightforward, and it seems like you're offering a great opportunity for investors, which, let's be real, just like you said, one of the number one obstacles for a real estate investor can be accessing funding, coming up with cash, whatever the situation is, to acquire property and do whatever it is they're doing as part of their business model. So with that said, can you just dive into a little bit more on how the actual structure of one of these types of loans works?
Yeah, we have two programs that really work real well for real estate investors. One is our business line of credit program. And what makes that unique compared to any other product out there for real estate investing is it's an unsecured line of credit. So this isn't something that's actually tied to an asset. So we don't Obviously, we'd like to know what you're doing with the money, but we don't need to know the exact address. We don't need to get an appraisal on the property. Pretty much all of those restrictions are gone when you're dealing with us because we're giving you a lump sum of capital and you're operating as a cash buyer at that point. So it eliminates a lot of obstacles that real estate investors have right off the bat. The way the program really functions is it is a revolving credit line. So you're looking at up to $150,000 that usually we can get for you based on personal credit. So when I say based on personal credit, everything that you'd be taking out on this program in your name, it would go into the business's name and not show up on personal credit. But nowadays, banks do require a personal guarantor, no matter how amazing your business and business plan is. So you'll take the corporation, we look at an officer's credit to just verify that they qualify, and then if they're approved for the line of credit, everything reports to the business credit only and not in the personal credit report's name. As far as qualifications, it is very credit-based, okay? There's no income verification whatsoever, so we don't care if you're making, a ton of money or if you're kind of just starting out and don't have really anything to show for it yet. Everything is going to be based on the personal credit score. We like to see credit scores over 700. Usually tell people if they're in, the 660 to 680 range, it still makes sense to have us take a look at things because a lot of times, we have credit experts in the office where a lot of times we can make slight tweaks to your credit report to get you kind of over that 700 hump and still get you approved. But we need to have somebody who has good credit. You can't have, a bunch of late payments recently, no major, derogatories such as a bankruptcy or foreclosure, in the past year or so. So everything is really going to just be based on that. Again, there's no collateral required, so we don't need to know what the property looks like. We will not be checking income. It's really just based on having a corporation established, whether it's a day old or 100 years old, and a person who has substantial credit.
Okay, so that actually, I got a couple questions that kind of I'd like to have the answer to based on what you just said. And I think you kind of answered it, but at one point you said, we don't actually need an address, but you kind of like to have an idea of what's going on. So is there like an application process where they're kind of submitting a business plan or a business model to you guys so you guys can kind of vet out that investor's strategy before you'd actually consider lending?
No, not at all. Our application is very short and to the point. It's just your basic, vital information, name, address, phone number, date of birth, social, that kind of stuff. As far as what they're doing with the capital, we like to know just personally, as people, what you're doing with the money to kind of, I like tracking success stories. I like to know that you actually have a plan in place, when you're moving forward with capital. I want to make sure that people have a way to pay it back, not because it would, affect me one way or the other, but I like to know that we're not setting somebody up to fail. So no, as far as the application process, it doesn't matter as far as what they're doing, if they're going to get approved or declined. It's strictly just based on the credit. Just for more a personal aspect, we're curious as to know what you're doing.
Okay, that makes a lot of sense. And you're probably also in a situation where you don't want to set someone up for a potential failure. So if you hear something that doesn't make sense and there's a red flag that goes through the office, you might have to have a conversation with that potential client, right?
Obviously, right now, everybody wants to get into real estate investing. It's hot. It's a good way to make money. So everybody's trying to jump into it. And a lot of people come to us not having any guidance. And, just having a quick conversation with them, you can understand that if you don't put this person in the right direction, they are going to fail. And that's obviously not our goal ever. So we want to help them out as much as we can.
And absolutely. And, if you ever need help with that, if you got any investors that are looking for any assistance, I'm always open to taking on potential new clients and things like that and helping them learn how to invest for the first time. Back to the questions and what we were talking about, you mentioned that it's all credit-based. So is income not really a consideration when you're vetting out these clients?
And for that program, no. As long as the credit is strong, we do not look at income whatsoever.
Interesting. Well, that's pretty cool. I mean, that's a great opportunity for investors because a lot of them can't show, especially buy and hold side. Those tax returns are showing a lot less than maybe what really ends up in the bank account.
Exactly.
Okay. If there is an investor who comes due who's got, let's say, a 660 credit score, you mentioned that you'll work with them to try to bring that score up above 700, which I think is great. Is there like a credit repair arm of your business as well, or is that just kind of the whole package where you want to get people, structured to get these loans out?
We have what's called a little bit of both. We've got what's called our Path to 720 program, which anybody who has, it doesn't matter where your credit's at. We don't want to turn anybody away. If you're not qualified today, I want to make sure that you're qualified sometime in the future. So if you're not able to get funded immediately, we usually enter you into our Path to 720 program where we do, credit repair for you, try and get your credit, any negatives off of it that we can get removed, and help you kind of build your credit back up to where you're in a position in the future to get funded. We do have a branch of our office that handles all of that kind of stuff, and that's kind of what we can do for people who don't fully qualify for any of our programs.
Right, but it's not like a third-party arm of the company where you're just taking on credit repair clients, right? Based on
No.
Right. Okay.
It's specifically for, we can, if there's people who are in a position where they're probably not going to get funding because their credit is, let's say, sub 500 at this point. It's unrealistic to think that they're going to get anything in the near future. I don't want to turn them away. I still want to help them get into a better position. But no, we're not just farming it out to a third-party credit repair company. We do everything in-house.
Okay. And is there a separate fee for that?
Correct.
There is. Okay. All right. That's what I wanted to know. Okay. Well, that's cool. Because, I mean, again, a lot of investors are just getting into this, and some of them through the housing crisis, we'll call it, and the downturn, and now back in the upswing again, may have gotten hurt through those, those experiences, and they still want to invest, and maybe they've just been sitting on their hands because they don't have their credit in the position that they'd like to see it, and you might be a great contact to help them out with that.
It's honestly the majority of our clients. And another option, too, where we're kind of talking about that, for people that come to us that don't have the credit to qualify right now and we can't fit them into any program, we do work with what we call credit partners. And honestly, probably the majority of our clients are using credit partners nowadays. So what I mean by that is if a client comes to us and their credit just isn't where it needs to be to qualify, but they still are looking for capital, what we'll do is we'll ask them, hey, do you know anybody, whether it's family member, friend, business partner, who does have credit over 700, they'd be willing to kind of partner up with you? Because what we can do, since everything reports in the business's name and not in their name personally, we can use somebody else's credit to make sure that their business qualifies and still get them the type of credit that they're looking for. As long as they're making their payments on time, which obviously that's everybody's intention, and nothing's going to ever report to that person's credit report. So they're kind of safe and in the clear. They don't have to worry about, not being able to qualify for a future mortgage for themselves or anything like that because their debt ratios are screwed up. Nothing would show up on their credit report whatsoever. It would all go into the business's name. So that's a great option as well for people who their credit isn't good enough. We kind of start working with them in our Path to 720 program to get them in a position to get funded down the road. But in the meantime, still able to get them capital by having them partner with, their wife, aunt, uncle, whatever.
No, that's great. And I'll be sure to ask you at the end of the show for your contact information on who they need to get in touch with at Pathway to get started, because I'm guessing there's going to be a lot of listeners out there that could benefit from something like this. And just to hit on this real quick, obviously we're based in the Chicago area of Illinois. Are you lending or offering these programs outside of Illinois as well, or is it just locally based?
Nationwide, we can do everything.
Wow. So you go all throughout the country. Wow, that's incredible.
Yep.
You mentioned keeping track of success stories, and I know one of my personal goals of this podcast is to kind of inspire and motivate other investors out there. Do you have any examples you could talk about of some of the success stories, whether they be your own or some of the clients you've worked with?
Yeah, actually, we're talking about a credit partner scenario, a couple that come to mind. We really think outside the box here. So when you go to a bank or something like that, it's very black and white, and you're either approved or declined. We like to kind of think outside the box to see how we can make things work, opposed to how we can turn people down, right? So there was a client that called us. This was, I don't know, maybe 6 months ago, and the guy was very frustrated. He was getting into real estate, and he applied at a bunch of different places to try and get credit, and everybody was turning him down. So I asked him if he knew why, and he said that his credit was in the mid-500s, which I understand now when nobody's able to approve him. The small detail that he gave me was that when he got a copy of his credit report, his dad's credit was actually showing up on one of his credit bureaus. It turns out he's a junior, and this happens more often than you would probably guess, but his dad's credit report was showing up on just the one bureau. So I asked him, I said, hey, what's your dad's score? What does it look like? And he told me his dad's score was in the mid-700s. I just simply asked him, like, hey, maybe nobody's asked you this before, but is there a chance that your dad would be willing to work with you on this? He said, of course he is. My dad wants to see me succeed, so let's get him on the phone. So we did a 3-way call with him right then. His dad got us his credit report. He fully qualified for funding, and we were able to get this guy $78,000 in probably around 30 days. He was at 0% interest for 12 months on it. So he was able to move forward with what he was going to do in a situation where everybody else turned him down just because we paid attention to the fact that his dad might actually be an asset to him here in this situation. Wow. So that's kind of a way where you can partner up with somebody to get things done.
Great.
More recent one I can think of, this is a person who was doing a real estate education course. I met her at an event, and she was a woman from Florida. She had paid for real estate education with a company, and by doing that, she overextended herself with her personal credit. So her credit cards were maxed out. She didn't really have any savings. So she had paid all this money for this education, and she was unable to actually get into real estate because she had no access to capital. So we talked for a long time. She had a very hard life going on at the moment. Her daughter was sick, and her husband wasn't working, and she really had no income coming in whatsoever. So again, we had talked to her about, hey, is there anybody else that'd be willing to help you? Her mom, who had great credit, was willing to do so. And again, we got her $89,000 in 14 days. And she just called me last week and said that they just finally finished their first flip. So they actually have some money coming in right now. So it was all because we obviously had helped and kind of talked to her about, working with her mother, which most other companies wouldn't have even kind of looked into.
I love it. So you're like the Robin Hood of real estate lending.
I'm the Robin Hood. That's me. That's me.
That's awesome. No, that's a great story. And I love hitting on the fact that, you're offering something that's, and just to clarify, 0% interest for 12 months, which, is somewhat impossible to get in any other situation. What happens, though, once that 12-month period, and I'm not saying like, hey, you've got a property or you've got $50,000 on your line of credit, if they want to extend that 0%, is that possible? Or what happens after the 12 months or the 18 months that you mentioned with that?
Yeah, in a sense, line? Yeah, in a sense, yes. So, and just to clarify, for our business line of credit program, it is 0% guaranteed for at least the first 6 months. Sometimes it extends to, sometimes there's people that get 12, sometimes people get 18, but no matter what, it's going to be 0% for at least the first 6 months. Beyond the 0% period, interest rates vary. Typically, you're looking at probably somewhere in the 9 to 12% range, but it kind of differs from each person. In a situation where, and this is why we like knowing what they're doing with the money, in a situation where they end up stuck with the property a little longer than expected, that 0% creeps around and they still have a balance on the credit line, there's a couple things that we can do. One, as long as they've managed things and made their payments on time and been pretty responsible with the credit that we extended to them, sometimes we're able to set up an additional company for them, or if they have another LLC or corporation that they can use, and we can get additional credit on that corporation and kind of shuffle everything over to buy them some more time. Mm-hmm. That's kind of the first thing that we look at. Another thing that we can do, and I know that you've got relationships with other hard money lenders or more conventional lenders, if they're in a position where they've owned this property now for X amount of time, they're probably going to be able to get some sort of conventional financing, hopefully, at this point. So because this is unsecured credit, there's no lien on the property. So even if we give this person $100,000 and they spend every dollar of it on a property, there's no mortgage on the property. The property is free and clear. So they're then able to leverage that and use a different source to access funds from the equity of the property. So that's kind of two different things that we can do to try and help them out of that situation.
Oh, that's great. I mean, I've mentioned multiple times in different episodes about having exit strategies already kind of planned out when you're getting into investing. And this would be a great example of not necessarily a whoops, but let's say you're extended a line of credit for 6 months and, your flip doesn't go as planned and takes a little bit longer, which, let's be realistic, that can happen. That can happen a lot. You got multiple options as far as, getting that line of credit taken care of and, keeping the property or refinancing it. I mean, I think that's great. So
a key thing that I tell people too, and like you mentioned, I mean, everybody always wants to think about everything going perfect. Well, I mean, the reality is it doesn't, right? Things take longer, you end up over budget, things happen, right?
Sure.
So if you've got a mortgage on this property or some sort of lien on the property and you need to dump it, sometimes you end up taking a loss because you can't, you end up still owing money to the hard money lender or however it's being structured. Sometimes you can't get all of your money back because of the fact that this is technically two separate things. You have your debt right on the credit line and you've got your asset of the house, and the two aren't connected in any way. If you needed to access capital in a short period of time, you could fire sale that property for whatever you needed to sell it for. There's no dollar amount that you need to sell for because the money isn't due once you sell that house. You know what I mean?
Right. No, that's great. So as a brand new investor, I mean, essentially they can come to your company, hopefully having a little bit of guidance from, you guys, your staff, or maybe somebody like me. We'll use that as an example. We obviously work with a lot of newer investors. I'm sure both of us do. And a lot of the times they need some help, but they can come to you, create, what's the preferred entity? Would it be like an LLC, or does it not matter as long as it's some type of corporation?
Yeah, it doesn't matter as long as they're an LLC or a corporation. Sole proprietorships are very difficult to work with, so you want to protect yourself and set up some sort of entity.
They create an LLC. They contact you either before or after creating the LLC, and then you basically are doing some type of a credit pull. And within what time frame are you letting them know what kind of money they could be potentially getting their hands on?
It's typically same day that we're able to give them some sort of estimate. And what we do is we do a soft pull on their credit to where they're not actually getting an inquiry or an actual credit hit on their credit report. We do a full analysis of their credit report, let them know, what they could qualify for now, or if they're not in a position to get funded right now, what needs to be done in order for them to get qualified, and kind of an estimate at that point of what they'd be able to get. That way they see some sort of, light at the end of the tunnel. If they take these steps, then they're able to get this amount of money. So we usually do that same day. I'm guaranteed within 24 hours we've got some sort of response for them. And then in that situation where their credit isn't where it needs to be, they can't find a credit partner, we do have an additional program that's still unsecured capital, but it's structured a little bit differently. It's more like an installment loan, and that we only need a 620 credit score for. If you want, we could talk about that a little bit as well.
I'm very curious to hear about this one. Go ahead.
Yeah, so with this program, it's a little bit different because it's not technically business credit. It would be a personal loan that would report on their personal credit. And because we're allowing a credit score all the way down to 620, it does require income verification. So this is more for a person who has a, consistent full-time job. They have to be receiving a W-2. 1099 independent contractor pay does not qualify for this program, so it needs to be W-2 taxable income or a structured retirement, Social Security, something like that. So as long as we have the income verification and roughly a 620 credit score, we can still usually get around between 50 and 100,000 depending on how strong the income and credit comes back in unsecured capital. This would just be a lump sum of money that's deposited directly into their bank account, and there's a 5-year term on it. So it's just a regular installment loan, just like it would be a car loan. You're just making your monthly payments, simple interest. Interest rates start as low as 6.99% and kind of go up from there. That's pretty much how it works. Again, no collateral required for that either. It is unsecured capital. You can do whatever you want with it.
And you're not going to have like Uncle Vito knocking on your door at 9 a.m. on a Sunday morning, right? No,
I sure hope not. No,
I'm just
definitely
joking.
not. These are all national, lenders that you'd be working with. You automatic payments out of your bank account. So no, you're not paying anybody in cash in the middle of the night in a parking lot somewhere.
Just checking. No, I mean, it sounds great. Like I said, I mean, what I really love about what we talked about is the fact that, again, there's a lot of people that you brought up a great example. You had a client out of Florida who probably, I'm guessing, paid a large sum of money to get into some type of real estate guru course.
Entirely too much, yes.
Entirely too much, yes. We're well aware of several of those that are currently out there in the market, and there's a lot of people that are jumping on board, but you can get started and, you can take that minimal experience you might have gotten from your course, and maybe you're a little strapped, for example, as a result, and still work with somebody like you in multiple options, whether it be with a joint credit partner or your own line of credit through your business, or like you just mentioned on the last side, which is typically what a normal person is dealing with, is they're going through some type of income verification. They have to have a W-2 job, et cetera, et cetera. So I like the fact that as your quote unquote maybe worst case scenario is typically what the average investor member population is experiencing anyway.
Exactly. And we can bundle the two programs together as well. So if somebody's looking for a large amount of money and they happen to qualify for both, that's also an option.
Oh, that's a great point. So they could potentially get up to like 200 or 250,000 maybe?
Exactly.
Wow. Well, that's great. So that opens up a lot of different choices for the investors and the listeners too. So you don't care about location, you don't care about condition of the property, you don't need the water turned on. I mean, you're just strictly unsecured line of credit, no lien on the property, no appraisal, nothing. Is that correct?
Yep. 100%. Yep.
What I'm thinking in the back of my head is, okay, you've got opportunities with sheriff sales, court type auctions where you have to have money, with essentially you're placing 10 to 25% down if you win a bid at a court auction, and then you've got to return with the balance that you owe, let's call it $100,000 within 24 hours of actually winning that bid. This would be a great way for somebody that's done the research and has enough experience to get started on the auction side for the sheriff sales, because typically that's got to be all cash immediately.
Right.
So that's something that I want to take note of, and I'll definitely put in the show notes, because there's a lot of people that have this curiosity and are actually educating themselves correctly, and they just don't have that access to that capital. And having you even as a backup plan, I think, is a great option. And that's one of the reasons why I personally qualified with you guys last year. I don't know if you remember, but I dealt with one of your guys, and I have not actually accessed the line of credit that I got from you guys, and I can't remember the exact amount, but it was right around 100,000. I think it was like 96,000 or something you guys extended. I just keep that in my back pocket as a rainy day fund, we'll call it. So if something doesn't work out right, if something goes wrong with everything else that I'm doing, or if I find a great opportunity and I'm strapped at that point, or not finding the type of lending that I would typically use, I've got you guys as another option. So I think that's something I want to mention as well. I actually had a conversation about your company with another investor probably about 2 months ago. We were at one of the meetups, and she said to me, she's like, well, why would you do something like that if you don't even need the money? Because obviously there's fees on your side that are associated with, accessing that potential capital. I mean, you have to make money for doing what you're doing. I don't know exactly what those amounts are, and if you want to talk about it, we can talk about it. But before we do that, I knew there was a fee associated with it. I paid the fee. I was completely content with the fact that I now had access to another 100,000. And this investor said to me, well, why would you do that if you didn't even need the money? And I kind of giggled a little bit. And I thought, well, because I have it once I need the money.
Right.
Just having that access or that option, because I can't tell you how many times I'll get a phone call from an investor or anybody, another real estate broker who's got a who's got an off-market listing that, we'll call it pocket listing for the general terminology, where they've got something that's going to hit the market, but they could potentially sell it before it hits the MLS. A situation like that where you need to have money turned around within, we'll call it 14 days, for example, on a 2-week closing. I mean, you can't beat having just the option of, as a backup plan. So that's
you hit the nail on the head. I mean, there's so many times clients call us and they wait too long. And unfortunately, the truth of the matter is banks want to give you money when you don't need it. When you need it, all of a sudden they don't want to work with you, right? It's better to take it now and be prepared. And then you can walk in as a cash buyer. It's a lot less stress. You know that you have it. And you make better decisions when you're not stressed, right?
Right. Oh, absolutely. And I think that one of the other points that, I want to reiterate is, and I know I already said it, but again, this isn't a situation where you're sitting down at your banker's office filling out, one of the Fannie Mae standard loan applications and then starting some type of process and then going through an appraisal and then dealing with underwriting where, potentially you've got to have a water turn on, you got to have utilities functional, you got to have the property in a condition that can actually close because the banks have certain regulations and restrictions on the type of properties they're going to lend on. And unfortunately, what happens with a lot of investors is they do have good credit, and they go that route because that's what everyone thinks they should do. Right. And, they're 3 weeks into a contract on one of the best opportunities maybe they've gotten their hands on in the last few months. And, a week before closing, the deal falls apart because the bank won't fund it based on something that's wrong with the property. Or maybe there's a hole in the roof, for example. I mean, I'm just giving you just generals, but this avoids any of those types of potential obstacles, and that's what I think is really important to hit home about and reiterate to the listeners is the options that are out there with, working with Pathway Financial. Is there anything that you'd recommend for like a favorite book you've recently read or any type of podcast you follow or educational source that the listeners might be interested in hearing about?
There's 2 things I could think of. This podcast right here is probably the best one to listen to, right?
Yeah, it is.
And the best way to learn and to get information from people in the industry is to go to our meetup group at Westwood and Schaumburg, right?
That's right, actually. That's a great... And I forget to mention the meetup enough. I know I brought it up earlier, but yeah, we meet once a month at the Westwood Tavern in Schaumburg, Illinois, which is about 30 miles out of the city proper itself of Chicago. We have guests come in from not only the local area, but we've actually got guys coming in from, I got a guy from New Jersey who's actually going to be coming in October to talk about multifamily investing. He owns like 200 units right now. He's done it all by partnering with private lenders, never used his own money. There's a great opportunity for any listener out there to go on to meetup.com and, look it up through real estate investing. You can kind of put it in the search bar on Meetup and find a local meetup group to go to and, start networking with other investors, because some of the best things you're going to learn is from, face-to-face discussion and experience. And it also creates opportunities for partnerships like we talked about with like the joint credit partnership. Might not be the same type of thing you'd get out of a meetup, because I would think that'd probably be a little more personal of a relationship. But there might be an opportunity to find a property that's a great deal or joint venture on an opportunity. And maybe if you're going to joint venture, you're going to bring the cash to the deal and someone else is going to do the work. And you use a company like Pathway to get access to those funds and actually complete the joint venture. So I appreciate you mentioning that. If you guys need more information on that, that's the Investor Empowerment Series Chicago, www.investorempowermentchicago.com. Like I said, we meet once a month in the Schaumburg area, which is the suburbs of the city. All right, Bill, just to start wrapping it up, what's the best way for the audience to get a hold of you or to get something started if they're interested in one of these lines of credit?
Yeah, best way to get things started to kind of see what you qualify for and see what your options are is to go to www.ineedcapitalnow.com.
I love it.
And there's a very automated system on there where they can just fill in some basic information. It'll steer them in the right direction as to which program would be best for them. Comes right into our office and we can get an offer back to you, usually the same day within a couple of hours. So again, that's www.ineedcapitalnow.com.
Okay.
If you have any questions directly and you want to call the office, phone number here is 630-855-2525.
Great. No, I'll definitely put that down in the podcast notes as well. So hopefully the listeners got that, ineedcapitalnow.com. If you're looking to get a unsecured line of credit on an acquisition or maybe to complete a property to get access to rehab funds, things like that, or even a joint venture partnership like we talked about. Side question, are you guys still located in Palatine? Or are you
yes, we are.
You're in Palatine, like on Northwest Highway, right?
Yep.
I've seen your office. I've driven by. Next time I'm going to stop in. I'm going to stop in and bother you. That'll be fun. That's all the questions I have for you today. Is there anything else you want to add before we close this up, Bill?
No, that's good. Looking forward to helping some people.
Great. No, I really appreciate you coming on the show today. I thought it was some great information and offers another great funding opportunity for the listeners of the show and throughout the country as well. So that's even better because it's not localized just in Chicago. So I think that's incredible.
Definitely.
All right, cool. Have a good day. Thank you for your time.
Thanks, Joe.
All right.
Thanks for listening to another episode of the Investor Empowerment Series radio show. Be sure to tune in next week for another empowering episode. We welcome your feedback, so please rate us on iTunes and Stitcher and visit us at www.investoремpowermentchicago.com or TannisGroupRealty.com.